This is the Value Investor Podcast with Tracey Reineck. All things value, all the time.
Welcome back, value investors. With stocks trading near all-time highs, where does that leave value stocks? Well, some of them are hitting new highs too, or they're trading very close to their breakouts. These are what I call value stocks with momentum. And, I know you all want to know, how do you find these stocks? Because they are pretty rare, actually. It's rare, kind of, to have value stocks right now. And then to add on the momentum is another narrowing factor. So I decided to run a screen to find these because, yes, you can run screens to find momentum stocks. So I ran a screen with a Zacks rank of 1 or 2. I always start out with that, and that's the strong buys and the buy stocks. And I put the rank on there because I do want rising earnings estimates. We just got done with earnings season now, and so there should be a lot of changes in those estimates by the analysts. And there were a lot of good reports. So I know that those analysts are raising estimates on a lot of companies, and I want the best of the best there. So I put in the ranks of 1s or 2s. Then for value, I added a value style score of A. So that's the Zacks value style score. We have that on Zacks.com. It goes from A, B, C, D. I think there's an F in there, something like that. Obviously, you want the A. That's the best rank on the style score. And remember what the value style score means doesn't necessarily mean these are the cheapest of the cheap stocks. It will look at things like that. It will look at some of the value fundamentals, what we consider the classic value parameters, but it also will compare the company with its peers or within the industry. So it'll really be more of a value with its peers. So that's going to throw a little kink in it when we go over the stocks here, because you're going to be like, what? That one doesn't seem like a value, Tracey, but that's because it's using the value style score here. Then I looked for the momentum part of it, which is the price within 10% of its 52-week high. Now, that's not going to necessarily tell you for sure that it has the momentum, but if it's trading, within close to that high, I like the direction that it's going, basically. So I can pick out momentum stocks after I look at the list of stocks, because this screen returned only 36 stocks. So that's not a lot. And if I had to look through them to find the momentums, that wouldn't be awful. But it turns out most of these did have momentum. And what is obvious from the list is that a lot of these are companies that Wall Street has basically ignored for a while. Or I guess I should say Wall Street and Main Street, because now the stocks are rallying. So someone is paying attention, but it's just not you or me. Like, a lot of these are ones that people really haven't been in for a while, at least a couple of them. So let's get right into it, because there are some intriguing stock picks this week in this screen. So the first stock is Caleres. That is ticker CAL. And we've talked about this one before, but it's been a little while. So this is the footwear company. Famous Footwear is one of their brands. Plus, they have a brand portfolio, which has brands like Sam Edelman and Naturalizer, just to name 2. Now, they just reported earnings, because we're still getting some of the retailers reporting here. And it was a record second quarter. Revenues were up 4.4%, and Famous Footwear was good. But they also saw the largest second quarter in Sam Edelman's history. I don't know what that means by largest. Is that just volume? I don't know. But that sounds kind of crazy good. And Naturalizer had its 4th consecutive quarter of wholesale growth in North America. So that's mostly probably to the department stores and stores like DSW or whatnot, where they have wholesale. So I like that. Footwear is hot right now. Caleres just acquired Blowfish Malibu. Maybe some of you know that one, or Blowish Malibu. But so they're still on acquisitions. They're still expanding. They have a 1.7 billion market cap. So they're not super small, but I would call them a small mid cap or a large small cap. These shares are up 21% year to date, and they have a PE of 16, because I did look at the PEs when I was looking at these. Of course, it's a value style score of A, because that's what we screened for. And these shares are basically at their new all-time high because they just reported and everybody liked it. So a lot of momentum here. You will get a little bit of dividend, yield of 0.7. So you're getting a little bit of dividend there. But on the retail side, this is one of the hotter value stocks that has momentum. That's Caleres, CAL. Moving on. So these are some of the interesting ones here. I'm going to do 2 in a row here of area I haven't talked about in a long time, maybe if ever, except when I was talking about value traps with this area. So now it's moving out of probably the value trap screen and into more of a regular value play. So this one is called the Andersons. This is one of my favorite of the fertilizer agriculture companies. Ticker is ANDE. This is a small cap. They're in Ohio. They've been around for forever. They have kind of a diverse business model. They have a grain group. They have ethanol, they do plant nutrients, which is the fertilizer side, and then they have rail group, which is the leasing and rail cars. The leasing in the rail group continues to improve, they said this last quarter. So that's good news, because that has been down on its luck for a while now, a year or two. Plant nutrients, that the fertilizers have been real down on their luck too, which is why these stocks are down on their luck. But they're still continuing to see margin erosion on the fertilizers, even though the volumes are up there. But the situation is improving on the nutrient side. And they did see a strong performance by the lawn care division. And then Grain Group, they just sold 3 elevators, I think, in Tennessee. But this was the 7th quarter of year-over-year improvement for the Grain Group. So these shares finally up off the lows. Like, someone is paying attention to the agriculture stocks, because year-to-date up 27.3% now. This PE is at 21. It does pay a dividend, yielding 1.6%. But again, we're buying for the value style score. So this is an A here too, obviously, as I just said, because we screened for that. But an interesting play, if you like agriculture, you might want to consider the fertilizer stocks and the agribusiness stocks once again, because our third stock this week is also in this area, and it's Mosaic. MOS is the ticker there. This is a big crop nutrition company. They have a market cap of $12 billion, so much bigger than the Andersons, and they don't have this more agribusiness play. They are just the fertilizer side. So they do the potash and the phosphates, or potash. I always get called out on it. Is it potash or potash? I don't know. I'm looking at Danny and he doesn't know either. So one or the other, you know what I mean. And this one, when they reported, they raised full year earnings. They reported in early August. They're seeing positive developments in their fertilizer, and especially in potash, and they expect that momentum to continue. So this is what we wanted to see, because fertilizers, as I said, have been really down on their luck the last couple of years. So they have $1 billion in cash on hand now. They have $5 billion in debt, but they're paying down the debt, and they're paying it a little bit quicker than they expected. So that's good news. The PE here is 18.8, so not too bad. Year to date, up 14.8%. So that's nice momentum. And you get a little bit of dividend with a 0.3% yield. So these are some interesting plays. I'm glad to see some agriculture and fertilizer stocks back in the mix now with better Zacks ranks. So if you've been ignoring that story, you might want to tune in. So let's switch over to restaurant stocks. You would think there'd be some value in some of these. Now, this is the one where I was like, what? How could this be value? It's Carol's Restaurant Group. The ticker is TAST. Most of you would know it as the largest Burger King franchise. They own about 800 restaurants. So if you want to buy Burger King, this is basically one of the stocks you're going to get into. Now, they have a PE of 45. So I look at that and I'm like, how is this a value? But remember, The value style score looks at it with its peers, and a lot of the restaurant stocks are way more expensive than Carol's is right now. I took a look at Chipotle, and that's trading at 56 times. Shake Shack's at 95 times, and you can find a lot of other ones that are more expensive as well. So this is coming up as an A for value, but it's also a triple play because it's got an A for momentum and an A for growth. So it's got A's across the board and the good Zacks rank. So I like all that. Now, this is a market cap of $591 million. So it is a small cap. There's no dividend, but these shares up year to date 22%. And that's probably because in the second quarter, it had great same store sales. They were up 5%. After seeing 4% a year ago. So those are real strong. Given what's going on in the restaurant group, there's a lot that are struggling there. But Burger King had a special promo. They did a 2 for $6 mix and match promotion, and that did really well. And they have a few new products that are also playing well with the consumer. So they raised full year guidance, even though they're going to be lapping strong comps in the second half of this year because it was good at the second half of last year. But they're feeling pretty confident here. So if you're looking for a restaurant chain, and again, it does have that P of 45 though, this is one that's kind of intriguing right now. And then let's switch over to more retail. So I was surprised to see Target on this list, but I really shouldn't be because they just had a phenomenal quarter and the shares were beaten down for a while, like a lot of the big box retailers. So it's a big cap, obviously. It has a PE of just 16.2 right now. So this is among the cheaper PEs of the list today, but it's got that value style score of A. It does pay a nice dividend yield of 2.9%. So I like that too. The momentum, these shares year to date up 33, almost 34%. That's very strong because, again, they were really beaten down. But that second quarter, just to recap, if you don't remember what they did in the second quarter, their total comps were up 6.5%. That's really strong. That's like Home Depot level. And that's the best in 13 years. So even for them, they knew they hit it out of the park. Same store sales actually in the brick and mortar was up 4.9. That's really strong. But they're really seeing a lot of growth in that digital sales. This is where they've really been working to combat Amazon and compete with Amazon. And this is where I like the retailers right now, the ones that are succeeding, because Amazon has forced them to be better. Without Amazon out there, who knows if they'd even have an online game or much of one, basically. But the threat of Amazon made them really put a lot of resources into online. And those digital sales were up 41% in the quarter on top of 32% a year ago. So people are now going to Target and ordering online there and, getting their expectations met. So they raised the comp sales and earnings guidance for the second half of the year on these strong numbers. And you got to think Target is on point with a lot of its home goods and a lot of its fashion actually too. So Target back in the game and looking like an interesting value play with the momentum. So these are often stocks you may not associate with momentum. Obviously, fertilizers, we got a restaurant in there, a couple retail, and you wouldn't necessarily think that this is where you would find the value with the momentum. But it's good to know what's happening out there and to take a look at some of these more interesting areas instead of always just growth. Yes, we know tech is hot and we know that's doing well, but these other areas maybe we don't know. And that's where, as value investors, we can find hidden gems and interesting, in this case, value stocks with momentum. So let's recap those stocks again. We had Caleres, which we've talked about in the past, but if you didn't tune in then, you should be checking it out now because I am as well. It's ticker CAL. We had a couple in agriculture, the Andersons, which is ANDE. Mosaic is MOS. We had Carol's, which is the Burger King franchisee, TAST, and of course, Target, TGT. So as always, I aim to bring you whatever's going on in the value stock area every week here on the Value Investor Podcast. So don't miss an episode. Subscribe. We are on Apple Podcasts as a standalone show, and we're also on Spotify now as a standalone show. So get us at either one of those. You can also get us on SoundCloud. I know a lot of you subscribe over there, and we're under the Zacks Market Edge on SoundCloud, so you get 2 for 1. But be sure to get us somewhere, and I'll be back again next week with some more value stocks.